It looks like we're headed for another 2007 style housing and financial sector crisis. How, you ask? By doing the exact same thing all over again. What happened? Well, before the Great Recession, there was a lot of what economists call hot money. Basically, a lot of excess money floating around from low interest or to near zero interest rates. So they invested in subprime mortgages, meaning you had to have less than the usual amount of money for a down payment and or income in order to be considered viable for a mortgage, except with a higher interest rate. What this meant was a ton of people who could not afford a mortgage or could not get a mortgage before because their credit wasn't good enough, their income wasn't high enough to be able to afford one, were now suddenly able to. This meant that a whole ton of people were buying houses for the first time that were never able to before. That meant a boom in construction and in the construction-related fields as untold numbers of new homes were created because of this new demand. Financial capital, being the parasite that it is, swooped in and collected all these mortgages from the banks and rolled them into CDOs, or collateralized debt obligations, as a way of making money. It works like this. Say you have a series of mortgages worth $1 million. There's $1 million to be paid back at principal with interest. That's expected to be about $3 million. But you want your profit as fast as possible, so you sell it for $1.2 million, so you instantly have $200K profit. The purchaser goes along with this because they can still expect to make a sizable profit themselves, if not more, depending on the mortgage and interest rates. The problem with this is the prices kept going up. Now, as they began trading even more and more people were going out looking for houses, there was a boom in the prices, which means now the prices got out of control and workers did not have as much an increase in their wages as was necessary to facilitate this new cost of a mortgage. That means they were unable to pay it. When you can't pay your mortgage, you're defaulting on it. And if your mortgage is part of a collateralized debt obligation, that collateralized debt obligation is no longer profitable, and it, as a financial instrument, crashes. Or, in Marxist terms, the price of said commodity, being homes, increased well beyond the abstract labor embodied in it, which, in Marxist economic theory, itself is a cause of crisis. Essentially, this caused a prairie fire type situation. There was a lot of dry grass that was the subprime mortgage lending. And the spark that set it off was the inability to pay those mortgages. The defaults are the spark that started this prairie fire. Lance Lambert at Fortune magazine has already pointed this out. The pandemic's housing boom has seen home price growth far outpace income growth. Over the past 12 months, U.S. home prices are up 19.8%, while private sector wages are up just 4.8%. The historically hot job market can't keep up with the historically hot housing market. That disconnect between home price growth and income growth has seen us reach affordability levels not seen since the last housing bubble. The typical American household would have to spend 32% of its monthly income to make a mortgage payment on the average U.S. home. According to Black Knight, a mortgage technology and data provider, that's the highest level since 2006. For perspective, that figure averaged 19.9 during the 2010s. Now, this price explosion has affected basically almost every single market in the United States. Very few have been spared from it, meaning homes are massively overvalued. Real estate research firm CoreLogic, according to them, 65% of housing markets are overvalued, meaning home prices there are above what local incomes can support. Meanwhile, CoreLogic estimates that 26% of the U.S. housing market are priced normal and 9% are undervalued. Last time housing prices were this inflated, this much over workers' ability to pay, was in March 2007, right before the Great Recession. Now, not all economists would agree. They say calling it a bubble would require both speculation-driven price growth and home price overvaluation. Now, of course, I'm no economist, but this data does speak for itself, and it's frankly enough to make me nervous. We know that prices cannot remain this high indefinitely. Something is going to bring them down, one way or another, because that is how the market works, or a self-correction, as bourgeois economists like to call it. But we see this sort of same thing happening again. Now, I'm a little bit more pessimistic than those who would say this is not a bubble. Now, the reason I say this is because I think a lot of financial institutions are holding these homes. For example, in Niagara, there's a particular investment company who shall remain nameless. One of their employees who works there is a friend of mine. And he or she says that they're buying up or ordering all these homes to be built because they're turning around and selling them at a huge profit. The problem is, sooner or later, they're not going to be able to move these homes, meaning they're not going to be able to sell them, and could go into some kind of financial crisis as a result of this. So I'm prepared to say that it's probably half a bubble, or at least in the Niagara region, that would be the case. I can't speak for all of Canada or the United States, but I highly suspect that given the deregulated nature of finance in the United States, that this is probably still very much the case. I would imagine that a lot of financial institutions are, essentially investing in new homes as the prices are so high. And I think that is something to be concerned about. But whether or not this turns into another great recession is, another story altogether. But everyone seems to be in agreement that there is another recession coming, because there's always another one coming. And a lot of things are out of whack right now that are not balanced because capitalism is an inherently unstable system. So whether or not this is the cause, we can't be 100% certain. But we do know a crisis is certainly coming. Thank you for watching. If you like this program, then please head over to my Patreon page and set up a monthly donation. It's your donations that keep this program running. Also, if you would like, please rate, comment, subscribe, and share in various social media.